I think when it gets down to the SMB space is that it is going to be very, very difficult sometimes to compete with maybe the Amazons of this world in terms of what they could do and what they can offer. And people got comfortable with that. But there's an advantage to being a local enterprise and having familiarity with the neighborhood that you're in and the people you've dealt with before.
Hi, everyone. I'm Ashoka Maimona. I'm the host of today's interview on behalf of Smarter Loans. Our guest today is Mario Bottone, the Chief Revenue Officer of Thinking Capital. Hi, Mario. How are you?
Good. How are you, Ashoka?
Great. We've spoken before, Mario. I'm very excited for our chat today. For our viewers who haven't heard from Mario yet, Mario is an industry veteran. He has more than 2 decades of experience leading startups and global organizations. And Thinking Capital is a household name for many Canadian businesses. It's one of the pioneering FinTech leaders in the country, revolutionized how SMBs access credit. So that is why I'm very excited to speak to you, Mario, to glean, insights from you in your role at Thinking Capital, but beyond that as well. So let's start with you, Mario. Why don't you tell us a little bit about your own professional journey and how it's led you to this role at Thinking Capital?
I kind of started off somewhere in the early to mid 90s in a more of a brick and mortar environment, but I was intrigued by what was happening with technology at the time. The internet was upon us, the internet age, and a lot of crazy things were happening towards the late 90s and the dot-com boom, and that kind of attracted me to the industry. And I've never really left technology since then. Got to work with a company that IPO'd, went through some early days with organizations that became global entities such as Monster.com. And from there, learned a lot about how people could use technology to better their business and better their lives. And in the last 10 years or so, I've been working with kind of more private equity owned companies in particular who've leveraged these ideas and created value with a number of companies out there. And I've been part of that from an operational and a strategic perspective.
That sounds very exciting. And I think there's a lot in there that we can unpack. But before we move into your sort of journey and how you can shed light and advice to our viewers in some of these areas, particularly leveraging technology right now, let's talk about Thinking Capital. For those who haven't heard about it, if you could give us, the Coles Note version of what Thinking Capital is and how it's different from its competitors.
Well, Thinking Capital kind of emerged around 2008, 2009 economic crisis. At the time, banks were retrenching or retreating from providing capital to small, medium businesses. And companies like Thinking Capital, and there's some companies in the US and some companies in Canada that emerged around that period of time, really were acting as a bridge to help organizations take it to another level if you were of a certain size. So if you were a restaurant or a retailer or a beauty salon, and you needed funds to basically fund your next investment of some sort or be reactive to an issue that you weren't anticipating and needed some capital, banks weren't necessarily there for you. And companies like Thinking Capital came about. And with the right type of evolution of our risk models, we were able to find the right segments of customers out there where we could provide loans. At the time was term loans, and it was called merchant capital advance, that aligned to the expectations of the customers and allowed them to fuel their growth and their operations as required. So it really was designed and built on the backs of a model that allowed us to basically fill a gap that was in the marketplace for small, medium businesses. And we all know there's a ton of small, medium businesses in Canada, and it's very diverse as well, right? There's a big difference between a car mechanic and a retailer or a restaurant. And now with the evolving economy too, there's so many different sectors that are becoming more and more important to us. And there's a digital element to a lot of these organizations as well. So all in all, I still think that the promise that Thinking Capital had back 10, 12 years ago still is maintaining itself in the context of supporting these small, medium businesses evolve or fix issues that they might have. And again, because we're there to support the SMB space, and it's not just about access to capital, it's timeliness access to capital. All these things are very, very important to allow these organizations to maintain their stability or their growth, especially during a period of time like what we've experienced over the last year or so. I think we've become even more critical for our customer base.
Definitely, Mario. And that sort of brings to mind for me the last time we spoke, you told me a little bit about the transformation of thinking capital over the past couple of years and how it's become an end to end digital lender. If you don't mind elaborating on that and perhaps tying it into why that's necessary right now.
Like anything else, industries evolve, and sometimes it takes an event like we were experiencing over the last year or so to take another leap towards technology. And it's not again just in the space that we're in, but in various organizations or various industries, you can see a similar growth pattern as it relates to adopting new technology. And I think in our circumstance, we had a view towards where we were going in the first place. We had an idea of kind of a destination as it relates to providing an end-to-end experience where small, medium businesses, and the thing to note here is small, medium businesses also have very similar behavior sometimes as consumers. So although we're B2B, there's a lot of commonality here in terms of how we approach the market and how customers adopt technologies like ours from a consumer perspective. So it made sense with everything that's been happening, of course, not since the last 10 years or so, the last 20, 30 years, that we find more efficient ways to basically deploy our services. And Thinking Capital, even prior to this transformation, had part of its model that was digital. I mean, we went out and sourced opportunity, made customers aware of who we were through digital means. And under those set of circumstances, at the time, a couple of years back, people would basically start an application process with us online. But that being said, it still was a very manual process on the back end. And I would say, hey, we're getting to the end-to-end digital experience soon. We're not fully there yet. But what we've done is basically look at different steps in that process. So it's not all about just making yourself aware or making your product aware to different customers out there, but also have them start the application process, go through some processes that normally we would have basically managed more manually. Customers can choose their bank account, for instance, and provide some additional information that helps facilitate the underwriting process. And we're slowly but surely starting to adjudicate more online. And there are components through our risk rules that we can apply and provide an offer, a pre-approved offer to customers that in our case right now gets reviewed from a manual perspective. But slowly but surely, I can see the day where we have some sort of express adjudication that's taking place as well. All this with the value proposition that if we talked a bit about access to capital and the timeliness, if you can provide a more rich digital experience, you can get customers through that funnel much more efficiently and much more in a timely manner than what you might have been able to do in the past. So that's the goal. It's all about basically doubling down, double clicking on our value proposition and getting better at what we're doing to service our customers. And we believe providing better services, more customer service, even through the digital funnel, allowing customers to pick and choose how they interact with us, all those aspects lead to a better value proposition for us overall. And that's what we're doubling down on at this stage of the game. We still have some room to improve, and we're going to do things on that front. But that's part of the process, part of the reason for this transformation. That being said, there's also other elements that are coming into play. Where I think the last time we spoke, we talked a bit about the onset of what we're trying to do with insights and providing much more cash flow information to customers. And this is also part of it. As you come in and you connect your bank, for instance, we can feed you some insights and some information that could be very valuable to you in terms of helping you manage your business. So we're part of this global trend towards digital transformation, and our customers are demanding it. So we're certainly complying, and I think we have some really good ideas in terms of where we can bring this.
That's also very interesting, Mario. And I know the last time we spoke, I thought a little bit about this afterward as well. I mean, you've said yourself, you've been in the industry, in the tech industry now, coming up on 3 decades. And it's interesting, you're talking about the tech demand rising. Perhaps it's a generational thing as well. I mean, in my mind, I would have assumed that most of the Canadian consumer base, and you spoke a little bit about businesses being like consumers, tapped into digital avenues and sort of tech opportunities to sort of maximize marketing and building market share that way. But I think this past year has showed us perhaps some industries aren't quite at the same level as others. So we can't really compare tech startups to, let's say the restaurant sector. But do you think that's a reflection of sort of industry specific behaviors and cultures, or does it speak to something about perhaps the Canadian consumer and how we are different perhaps from analogous jurisdictions, perhaps not so analogous, but the US? I don't know if you have any thoughts about that.
I would say, going into this thing, first of all, no one could really have planned for what happened, right? I think, but there were companies that were clearly moving in that direction. And yes, there were some companies and industries that we really didn't think much about that evolved dramatically during this process, right? During the last year or so during the pandemic. But there were others that were clearly moving in this direction and got an accelerator boost to, basically be the companies that maybe are well poised today to take on the next generation of growth in this economy. That being said, I get back to the idea that, I think restaurants have been around for over 3,000 years. So people still need to eat. So what happened here is we just figured out ways in which we can get access to food in some instances through different intermediaries that could bring food from the restaurants to your home. Obviously, restaurants that were, let's say, focused exclusively on the dining room experience had to go through this transformation. Some didn't make it, but some will, and some will be able to evolve their model in one where maybe we go back to restaurants in a different way, and we have maybe partitions and other things that are involved in the experience, but we also have the type of models that have come up from Uber Eats and Skip the Dishes and DoorDash that allow us to get access. Now, that's just a microcosm of an industry that, we used to be strong in, and we still are, but there's other industries as well that have evolved dramatically during this process. And I would say it starts with an open mind to how you can basically evolve your model. I think a lot of people up front, when this thing hit back in March and April, said, hey, what do we need to bet on? How do we basically position my company or my idea towards taking advantage of the new normal that will evolve from this? And I think there was a perspective that there was one normal that would evolve. I don't think that's the case. There was a normal during the process. There was a normal that popped up during the wave 2 situation, and there's a normal now, I think, when it comes to the wave 3. And I think there's always different variations of different industry models that will evolve over time. I don't think vaccines and mask wearing is going to stop when 80% of Canadians are vaccinated. I think there's going to be a new reality in terms of how we evolve from there as well. So it's about staying in front of it and understanding where it might go. There's a few consistent things. Well, what worked before was a situation where if you serviced your customers the way they wanted to be serviced, you probably were going to be in a very good position to grow. And I think that's still the case. Mind you, customers have changed their behaviors and they're looking at different ways to access your products and services. So how do you position yourself so that they can get access to that? In many ways, as much as this has become a much more complex environment, fraught with a lot more competition, it also opened up your storefront. If you were a retailer, for instance, or you were a provider of some sort of services, because now you can look at another channel that didn't necessarily discriminate you from which street you were on, what neighborhood you were on. If you had a good product or service, you had an opportunity to evolve that and maybe tap into a new segment of customers.
Exactly. I think there is ample room for growth in the coming year, 100%. In terms of thinking capital's growth opportunities, what are some future goalposts that the company has set up for?
As you pointed out earlier, we're trying to become much more of a digital provider, and we've evolved our product line through this process, and we're offering line of credit, which we think is the right type of product for the Canadian SMB marketplace because it's contextual financing. You use it when you need to use it and use it for whatever reason you need to. So that in itself was, I think, a significant development for us as Thinking Capital. And as I mentioned earlier, we're also doubling down on insights. So we've already launched a beta version of an insights product called the Cash Flow Advisor. That's evolving significantly over months ahead. It will offer cash flow protection, so kind of leveraging both worlds, a bit of a flywheel model where, we'd be telling you some of the things to be aware of, how you compete with other companies like yourselves in the markets you're in, And in the meantime, we can look at your cash flow situation and with our insights engine, determine whether you might need access to capital, and we can provide that too under a set of circumstances. So think of it as a kind of a 360 solution towards understanding what your trends are, what we can anticipate your trends being, factoring in some market environment stimuli or information, and then having that engine on the back end that allows you to basically access the capital as required. Now, of course, this is going to evolve as well towards maybe payment technology down the road as well, and working with an ecosystem of suppliers and customers and different vendors and third parties and you name it. So it's an exciting time, and I still think we're at the beginning of the journey. It took us like 12 years to get to where we are today. The next 2 to 3 years, I think, are going to be pretty dramatic in terms of what this company will look like.
Yeah, no, definitely. And I'm curious as well, from your perspective, how much has the market changed and thinking capital's position in the market, this ecosystem you talk about in the past decade and this expedited growth that's sort of taken place in the past year and likely very much so, as you've indicated, in the next couple of years?
There's companies in the US I think have started to pave the way, Bluevine, Fundbox, you name it. And then there's a whole SMB ecosystem of software companies out there that are working with providers of that nature, whereas, lending of some sort or financing of some sort is part of that SMB ecosystem. So think of it, SMB market traditionally was less sophisticated, but it's going to have to become more and more sophisticated, especially if you want to take on some of the larger players out there. The efficiencies you need to garnish from products and software and access to capital and the ability to provide services to different intermediaries within your business ecosystem. Those are all things that people are looking for efficiencies on. And again, I think a lot of this is born from what we've expected as consumers as well. The 10, 15 years ago, there were certain expectations in terms of how you accessed B2C type services or products. And that in itself has evolved. And now that has started to transform itself in the context of the B2B SMB. It used to be just the big companies were comfortable automating all these functions we talked about. But now, in order to compete, you see the evolution of the neobank and other financing tools and credit cards for small businesses. All those things are evolving. Very, very important for thinking capital play a role in that evolution and in that context. And again, with the access we do have, we might be in a position of opening up doors for other partners and players out there as they can to us. So I think the key element here is to understand it's a very complex market. It's very heterogeneous. There's not one model that works across the board for these different types of companies. It's definitely sometimes a vertical approach that might work one way versus another, but it's born out of product, market access, services that you can provide. But there's one thing that's common is that people want to have access to these services in a similar way to what they get from their B2C experiences, which have just evolved much more efficiently over the course of time. And now that expectation is on the shoulders of companies like Thinking Capital and Intuit and other companies out there that have grown in this SMB marketplace and are kind of required to take these next steps to basically meet the expectations that these small, medium business companies have as it relates to the adoption of their technology and where they can go next.
And speaking of competition, Mario, with the big tech giants like PayPal, Square starting to offer business funding, and these are companies with expansive data, they have captive customers. What does that mean for the rest of the business financing industry and perhaps even, smaller business lenders?
It means that companies have to be aware of their options. And in some instances, like a company like Thinking Capital is also putting an emphasis on how do we help organizations make that pivot towards a more digital experience in terms of rendering products or services to their customers. So part of what's on our horizon is how we basically better encapsulate all these data sources that are out there from all these e-com platforms and other digital sources to allow us to basically assess better our customer profile and allow them to get access to what they need in order to properly evolve their business. So it's, there's tons of possibilities out there, and companies such as those have made, admittedly so, have started making some inroads in regards to financing and looking at ways in which they can provide financing to their customers. We're taking an approach which basically is not the reverse, but a scenario where we come in, we understand where you've been. Typically, there's two types of e-com customers out there. There's ones that are, traditional brick and mortar that are making that move towards an e-com experience. And obviously, during the last 10 to 12 months, there's more and more of those customers that are adopting these type of technologies and understanding that they have to evolve. So there's a big, big market there. It's huge. And then there's their pure play players, the guys who, normally would have gotten their money from the VCs, who are basically doubling down on inventory and infrastructure to help their e-com experience. So I think we're going to be positioned to work with this ecosystem of a variety of data sources, understanding that there's a lot of hybrid models out there. It's not just sometimes a pure play e-com model, even though that's something we'd be able to service, of course, but there's a lot of companies out there that have different sources of revenue, different bank accounts, different e-com accounts, you name it, and being able to encapsulate that in terms of better understanding the profile. And with our insights engine, not only understanding your past, but what could happen in the future. And given that sort of circumstances, have a bit of a crystal ball in terms of where you might need to be. And again, with all the capital resources we might have, and with all the information we can provide you and the partners we can bring to the table, give you almost, in our cases, I think, a one-stop shop in terms of providing a 360 solution mix to some of these SMBs as they evolve to the next level.
Mm-hmm. Okay, so in terms of, you're speaking of e-com customers and hybrid customers, you've spoken about the insights tool. How much room is there to improve the lending experience for these customers from a tech perspective?
I think there's a lot of room. I think a lot of the players today are looking at potentially some different sources of revenue, but in terms of understanding what that entail as it relates to understanding not only the history of that organization, but in terms of what the future could be, with the different types of mechanisms we can provide from a capital perspective to enhance your ability to open a new market or make an investment in your business that could grow your business, all those different components. I think there's a bit of truth on all these different fronts. I think the history we have as well with a lot of the customers we might be dealing with is also very, very beneficial. And the thing is, when you're in a financing world, you've got to have a perspective of risk management. Right. So, you've got to be able to understand the trends that happened in the past and how you position yourself effectively to offer the proper services and products to the customers you're dealing with so that they can effectively leverage that capital. And you as a provider are happy to allow them to access that capital. So, we're in a position right now where I think our history works for us. Obviously, the technology world is evolving. There's more opportunities out there for us to get better insights on our customers and their business models. We need to incorporate that into our business. But I think the big value that we bring moving forward, we are going to be able to be a provider of financing services and insights that is fully encompassing of how these businesses are evolving today. Some of them are evolving strictly on the e-com side of things, and that's great. We're going to be there and we're going to understand transactional trends, markets, you name it, to be effective there. But we're also going to be in a position of helping those hybrid customers who have other concerns, opening up their storefront again, buying merchandise, worrying about logistics, and combining those two worlds. And I think from that perspective, a company like Thinking Capital is going to be very, very effective in terms of providing a strong service offering to these organizations that there's many more of, because companies got hurt with COVID. Some of them didn't make it, but there's still a lot of them left. And they're going to need services, products, to help them evolve into the next 2 to 3 years. And we're going to be there for them.
Mm-hmm. 100%. And I mean, in terms of the trickle effects, the financing community in general, I've spoken to players over the course of the past year. In your opinion, what is the state of the financing community as it stands now? In the past couple of quarters, what are some trends you've noticed, perhaps innovations, even beyond tech?
I think, you're starting to see the advent of the neobank becoming a much more of a traditional service offering, specifically to small, medium businesses. I know startups and FinTechs that are evolving around that line, payment technology. come into play, credit card, prepaid card type of technologies out there, giving people more options, access to capital, and taking on some of these larger financial institutions as well in terms of what they're offering. And it'll be interesting to see. There'll be more competition in the market. Open banking is still not where it needs to be in Canada versus maybe some other markets out there, but that's going to be interesting as well as organizations and organizations are part of the ecosystem in particular can share information about consumers and customers out there. And that too, I think, is going to be a big, big leap forward when that happens. Obviously, in light of what's happened over the last 12 months, there were organizations that from, let's say from March all the way through June were in almost lockdown mode, complete lockdown mode, and they've had to evolve their business model so there's new sources of capital or information to look at there. They are making the moves in the right direction. Companies are growing out of that particular necessity now to basically adapt to these new models that are evolving. And there's a lot of companies out there that have to get weaned off the government programs too, right? I think that in itself, in light of what had to go into the economy and what type of support that had to be provided from not only a consumer level, but also on a business level. Now, with hopefully, I know we're starting wave 3, but, hopefully within a month and a half, the vaccines catch up to where we need to. And we could look at, the US for inspiration there. There will be a time to now, let's take advantage of this market. Interest rates are still very, very low across the board. There will be an opportunity to potentially see what are the next steps in terms of investing in your businesses and under a set of circumstances, how the SMB world now fits in to this evolving economy. There's going to be entrepreneurs going back into the economy now too, who've shut down and now had to rethink their business model. And some of them were able to evolve through this process. Some of them had to shut down and rethink their business or start a new business altogether. And that's going to be another dynamic that I think will require the needs of companies like ourselves and other ecosystem SMB players to help these companies make the next move. So a lot of things are going to happen at once. Big confluence of different possibilities and dynamics, and should make for an exciting period of time over the next few years.
In terms of that exciting time, I mean, for the people struggling now, for the SMB struggling now, you're immersed in that scene. What is some advice that you have for those folks?
It's hard. I think we've all experienced it personally, but I think if you've had to shut down your business or you have 20% of the volume you used to have, and every time your premier speaks to COVID crisis situation, you're wondering if you're going to get locked down further or you're going to have less access to your customers. It's almost a nightmarish type of scenario. I think when it comes down to it, the ones who've been successful through this process and the ones who will be successful, because I think even if you feel like things haven't gone your way, there's still possibilities and opportunities in this economy post wave 3 that warrant attention. But it's clear that, as much as behaviors have changed, there will be some, I wouldn't say reckoning, but some return to a quasi-normal to what we've had before. As much as we went from here, I think we're going to come back here somewhere. And I think people who can recognize that in terms of that reality and have hope because they've made investments, infrastructure investments in their business maybe prior, and they're wondering if they're going to be able to leverage them. I think the key on here is stay the course, but embrace the technologies that have evolved during this period of time because they're likely here to stay. Maybe they won't represent 90% of your business. Maybe they'll represent 40 or 50. But it still makes sense for you to basically look at those technologies and leverage them as much as you can because, as I mentioned earlier, it opens up new markets if you do it well and effectively. And it might introduce your solution to different players or customers you normally wouldn't have been able to introduce yourself to. So stay on top of those evolving trends, embrace the technologies. The question sometimes is, do you use a third party to get your product to market, or do you basically build it internally? Do you have the means to build it internally? Understand your limitations and maybe work with a third party, a gig economy worker if you need a website of some sort or build up on your e-commerce presence. There's a lot of people out there with a lot of talents that have helped big companies before make these type of leaps, and they're available right now. The labor market's changed as dramatically as the business market has changed, and quite frankly, leverage some of those talents out there to help you make that leap forward.
Actually, Maria, that is a perfect segue. I wanted to ask you because you have a really strong background in marketing. That's your expertise. What are some tips or marketing advice that you have for not simply struggling businesses, but businesses operating right now, trying to differentiate themselves from competitors?
Well, depending on the market you're in or the industry you're in, I still think there's a commonality. If you embrace insights and information, it helps. And we're seeing people making information-based decisions that are helping their businesses moving forward. And it's always important to stay on top of metrics as you can develop them. That being said, understanding your customer profiles and how they might be evolving during this phase and this period of time as well, whether you have a digital presence or a non-digital presence, who's coming to your store and why, and what type of access they need to your product or service that you can or cannot provide. It's rooted a lot in that process. It's harder to differentiate yourself sometimes now with such a proliferation of digital information out there. There's, for instance, restaurants, you can find maybe with the same restaurant on 3 or 4 different platforms, for instance.
Mhm.
And on e-commerce, of course, you can open up your own online store, but you're up against some of the big players out there that have only gained in strength over the course of the last little while. And they offer options that go beyond what you could provide. And so how do you compete with them? I think when it gets down to the SMB space is that it is going to be very, very difficult sometimes to compete with maybe the Amazons of this world in terms of what they could do and what they can offer. And people have gotten comfortable with that. But there's an advantage to being a local enterprise and having a familiarity with the neighborhood that you're in and the people you've dealt with before. There are certain things that these big companies, these big giant organizations out there, that are going to do well, and they're going to continue doing well, and they're going to continually surpass your capabilities on certain fronts. But there are certain things as an SMB that you can bank on in terms of coming back to somewhat of a normal state and leveraging your digital capabilities in terms of getting your brand out there, getting the information about your products and services out there, and the ability you can be in terms of adapting to the local realities of your business and dealing with the people that you've dealt with before and expanding your base, maybe with some sort of viral element to it, I think could be very, very useful in terms of allowing you to compete effectively in this new landscape. But I think it's proven through this entire process. If you haven't started adopting technology in some way for your go-to-market, you should start considering it.
Mhm. Well, thank you, Mario. In terms of perhaps common mistakes or things that you believe that business owners should know before they seek out financing or are looking for loans, what is some sort of advice or tips you have for business owners?
I think people instinctively know why they might need something. And by no means, one of the ways that we differentiate ourselves, I think, from some of the other alternatives out there in the big banks is, you don't have to come in with a 30-page business plan in order to get access to capital. We look at your cash flow in particular and get a good feeling for it. But in terms of good business practices, it always makes sense to have a plan. You should always have a perspective of what your use of proceeds, why you're going to use the dollars, and what are you trying to do with it. I talked a bit about our digital experience. We have a lot of terrific customer people, whether they're account executives or customer service or customer performance people who work with our clients. And as they require some guidance and advice, they're actually very vertically focused as well. And I can talk to them a bit about the different ways in which, the access to this capital could be very, very helpful to them. And, just having that partner on the other side of the phone, for instance, or over a chat of some sort, I think makes our customers feel that, we have their best interests at heart, which we do. So we don't want you getting access to more money than you need. You shouldn't be pulling more money than you need. It's great to know you have it. It should be applied in the way that best maximizes your business. The idea here is, beyond interest rates and everything around that, is that every dollar that you get lent from us should be something that helps you move your business forward. Debt could be something that is a very useful tool to not only secure your business, to grow your business. And, I think our advisors are there to help our customers make those type of decisions and help them best leverage the type of services and obviously capital that we can provide.
Mhm. And that's really helpful. All right. Well, thank you so much, Mario. Is there anything else that we didn't touch on that you wanted to address or share with our viewers?
Not really, because I think we basically went through a pretty good gamut of questions and issues.
Yeah, same here. I mean, I think the conversation, similar to the last one we've had, touched on a lot of areas in terms of challenges, but with challenges come areas for growth. And I think that opportunity is there. I think 2021, the perspective should be on opportunities ahead and growth ahead. And it's hard when you're in a place of struggling, but I think reaching out to, experts in the industry and looking for that kind of advice to see how you can repivot helps. So we really appreciate you sharing that advice and insights today, Mario.
Thank you, Michelle. I appreciate it.
Thank you. Enjoy your week. Take care.